Hey everyone, how's it going? We just got the closing bell for Tuesday, September 24th, and we kind of had a volatile day. Even though we didn't really end up going anywhere, we traveled quite some distance along the way. If we look in the morning, we started down. We gapped up during the overnight session because of some great news out of China mostly. There was announcements that the Chinese government was going to release the biggest economic stimulus package since COVID. So that was the news over here. But by the time the US opened, we just kind of traded down below yesterday's close. But after the morning, once we had the bulls come in, they just stayed in control throughout the entire day. Even so, we ended up at what is this, 571.22, really in that last minute surge. I would call it before that last minute. We are really here at 570.88. And it looks like after markets, we're undoing that last second move up. So I would just call it, I'd be more comfortable calling it around this 570.9 area. If we look at it that way, or even if we don't look at it that way, even if we look at where we closed, we're really just chopping sideways still. We're still where we closed on Thursday after the gap up after the Powell announcement. So what we're seeing right now is, interestingly, it seems like the market is taking more cues off of what's happening worldwide rather than what's happening in the US domestically. So after Powell's announcement, the US market came down, and it was the overnight session that brought us up. And then today we came down. I'm sorry, we came down after the open, but the gap up was due to the China announcement as well. So it just seems like right now what's going on in the US just really isn't moving the markets right now. So unless there is a lot of worldwide events, a lot of worldwide news, my expectation is that we're going to just continue chopping sideways until we get to the election, or there's a clear candidate that is leading one way or the other. Now that it seems like we're not going to get another presidential debate, it's probably going to be pretty unlikely that we're going to have a clear candidate, at least clear to the markets. Individual people might have their opinions, but to the markets, there's no more new information coming in that gives us a good idea. So that's a pretty good indicator that we're going to chop sideways into that election. We still are of the opinion and reality that, yeah, we can float higher, and yeah, we can make a higher high, but it's just not going to be that much higher. There is still a lot more downside risk than there is to the upside, but it does look like this trend is intact for now, and that we can move a little bit higher. And once we get to maybe 575, 580, I would just really be starting to get very cautious. So very cautiously bullish at the moment, just very, very mildly bullish at the moment, uh, because for the most part, we're just going to expect to chop back and forth. Let's take a look at all of our broad market. So VIX, see how volatility is doing, see if that's come down. As you see, we're still at 15.37. Yes, we've come down, but we're still elevated. We are not at these 10s and 12s and 13s and 14s. We're still above 15. So that's not giving us excellent vibes right there. Let's take a quick look at CPC. I haven't looked at that in a while. 0.83, nothing to really help us in our forming our opinions. Let's look at our QQQ. QQQ, again, chopping sideways, slightly higher, double top right here. So we'll see if this can break up and above. And really, we want to see it start to fill this gap right here before we're super optimistic about the QQQ and more importantly about the SMH. SMH, you can see it's still having trouble at that EMA 100 and the quarterly VWAP. So we really need to see some strong interest come in and break us above that area and take us all the way up to this 260 to 265 area before we get super bullish. So basically, yes, the S&P can continue to move upwards. And yes, maybe QQQ and SMH will move a little bit upwards. But for the S&P to really go into a bullish mode, the SMH has to overcome this gap right here. The QQQ has to overcome its own equivalent gap. So the SMH and the QQQ have all the large cap, the biggest mega cap stocks in them, the Magnificent Seven. S&P has that as well, but what's really going to carry the S&P further higher, significantly higher, is those mega caps. And until we get interest back in those mega caps, we're going to have a tough time. NVIDIA, I think, had some pretty good interest today. You can see that this is a fairly significant bar. Not as big as this one, but it is bigger than in the last week that we've seen. So maybe this will start to carry some momentum upwards, but overall, this is still a downward slope. So we're not there yet. So we want to see the evidence that this is going to continue to see attention and buying before we can believe that the SMH has potential to continue to move upwards and fill that gap. So we'll look at all those things as leading indicators, or at least more clear indicators of whether or not the S&P still has a lot of potential to move upwards. So far, it's a lot of wait and see, which is appropriate for a choppy environment. Something has to break first. Something has to stop being choppy before all the other stuff. And once we start seeing that become unchoppy or directional, then we see something else get directional, and then we have the compounding effect of more and more things becoming directional, and then we'll see it in the S&P 500. And let's take a look at our IWM. IWM still struggling at these highs right here, these local highs, and it's pretty significant area of resistance. We have a lot of liquidity right here. So it might be kind of tough for IWM. So until IWM gets bid, until SMH gets bid, until junkier, riskier stocks like the ones in the ARK fund are bid, we're probably not going to be able to move significantly higher in the S&P 500. Let's take a look at our momentum. We haven't seen it in the overall market in quite some time, so I'll look at that first. So all stocks above $2, 62 and 60. Okay, that's not bad. That's not bad. So we're not in, I'm sorry, yeah, 62. We're not in any sort of imminent danger of going into a bear market, but I don't think anyone was thinking that anyways. There might be a lot of fear mongering by marketers out there that are saying, oh my God, recession. Oh my gosh, inversion of the yield curve and all of this. We're going into recession. It might be true, but there's a delay. It's not, things don't happen overnight. So this market can still go up before it goes down until we really see a recession. And of course, the economy is not the stock market. And we're not investing in the economy. We're investing in the market. So we really want to take our cues from the market. The economy, we might get some clues on the future of the stock market from the economy, or we might want to prepare ourselves because of something that's happening over there, but we're not going to trade because of it. There's a big difference. So you have your trade idea, you have your timing, you have your trade execution, and you have your management. So your trade idea might be developed from something like, oh my gosh, I think we're going to have a recession because of all of this interest rate inversion, reversion, and all of this other historical data that might form the thesis of your trade idea, but you are not going to execute. Your timing isn't going to hit until you actually see it happen in the market. So there's a big difference between the development of your trade idea and all of the economic and world factors and et cetera, that go into that analysis, and the actual timing of when you're going to enter and how you're going to enter, which instrument. If you believe there's a giant recession, is it better to short the S&P? Is it better to go long the VIX? Is it better to short SMH? Is it better to short QQQ stocks? Is it better to short IWM stocks, small cap stocks, where luxury goods, Is it better to go long consumer staples? What is it better to buy gold? What is it? So there's a lot of ways that you can execute on the same trade idea. So you can't confuse what phase of the trade you're in while you're developing it and while you're forming these opinions. So for now, the market is telling us not yet. Even if you think that we're having a recession, like we might already be in a recession or that a recession is looming, the market is saying, yeah, maybe, but I don't care about that. I'm still going up. So, or at least chopping sideways. I'm still chopping sideways and maybe floating up a tiny bit. So you don't want to confuse those ideas. S&P is still moving upwards. We're not seeing a lot of support from the QQQ. We're not seeing a lot of support from the SMH. We're not seeing a lot of support from IWM or ARK Fund. So we are looking okay on momentum. So overall the picture, and we're not looking great on VIX. So overall the picture is, yeah, okay, we see that the market is going up, but because of all these other things, we're not going to believe that this market is going to go up very strongly or with a lot of or very quickly, I should say. It's not going to just spike upwards, and the upside is limited. And then at some point in time, all of these factors will add up, and either the S&P will start moving in that direction, or everything else will strengthen up and start supporting the S&P, and the S&P can go higher. That's what we were talking about in terms of the election. The election is a catalyst, is a point in time in which many factors can suddenly switch all at the same time, and they can switch in favor of the market going up, or they can switch in favor of market going down, or they can confuse the heck out of everyone and the market will go sideways. So for now, it looks like we are waiting for that. And in that waiting, the market is most likely going to chop sideways, and there is a little bit of room to go up, and there is more room to go down, but overall, choppy sideways. So hopefully that clarifies everything and we don't get too confused. Okay, so momentum, let's take a look at our 90-day highs and lows. 340 on the up high side, 19 on the low. So our momentum is once again building upwards, and we're starting to get close to 400, and we are not making a new high in the S&P. So this is again telling me that we have a pretty good chance of pulling back or doing a nice little mean reversion before anything else. That might be the first step. Although there is a little bit more room in that momentum, so this could go up a little bit higher, but really we've just been chopping sideways. So maybe a tiny bit higher, maybe more chop sideways where a lot of stocks making 90-day highs, but it doesn't carry us very far forward because they're smaller cap stocks. That could all happen. And then another mean reversion down to the EMA 8 or EMA 20, and then we'll see. But that's getting a little ahead of ourselves. We're not there yet. So if we see this tomorrow break above 400, then that's what we'll prepare for. But if it's still in the 300s, then we're going to wait another day and see if that happens. So for now, everything is supporting this idea that we're chopping sideways, maybe slightly up, and maybe coming to a time soon where we'll have a little bit of a mean reversion. And you saw what the last mean reversion was. It didn't even make it to the EMA 8. So that mean reversion doesn't necessarily mean something super significant. It just might mean, hey, if you're going to buy stocks, like if you're optimistic about the S&P continuing to move upwards, you might just want to wait for a tiny little pullback before you go into those stocks. It just optimize. Again, it comes down to the timing. You have your trade idea, and now it's your timing. And then when your timing is right, then you go on to your execution. So right now, basically, wait and see. Basically, this market is not giving me anything that says I need to take action. So personally, I'm going to hang on to my positions and just wait until things resolve themselves and we start to get a clearer direction in the markets. I think that's pretty thorough. So if you have any questions, you can always send them my way. My new email address that I am now checking very regularly and answering any questions that come through there is kane@investpub.com. That's Kane at investpub.com. And I'm more than happy to answer any questions that you might have. Have a wonderful rest of your day, and I will see you tomorrow.